if you do not aspire to be a top 5 player in the world, you never will be. So, you have to have instilled that you're going to be a top 5 player. And that doesn't guarantee that you will be, but you have to dream big in order to become big. And so what we do is, the reason I say we're cash flow neutral is that when money comes in, we use that for expansion. So we do, if there's profit left over, that's developing the brand, because ultimately, we're in this not to be a commodity, we're in this to be, a high-end, product company with a strong brand.
Peter Espig joins me now. He's the CEO of Sweet Earth Holdings Corp, trades on the CSE under the symbol SE. Peter, welcome.
Thank you. Thank you for having me.
You bet. It's a pleasure. Peter, let's start with an overview. What is the business model of Sweet Earth Holdings?
Yeah, so Sweet Earth, we are we function in the CBD market, but we're unique in that we don't do, so we're a farm to shelf platform. Where we start with the farms and end up on the shelf. But I would say what really makes us unique is our emphasis on the research side of product development. So you have a lot of groups that focus on what they have is they're good farmers, or then you've got good marketers. And I think what we did is, and that could be because of my oncology background, where we really focus on the efficacy and the bioavailability of our CBD products, and that's how we kind of make our products that we sell to the market. And it's obviously because of the emphasis, I think, on research that we've won so many awards for our products.
I'm a huge fan of CBD. In fact, you just reminded me I forgot to do my daily drops today, but I'll do that right after. So in which markets do you operate?
So we have 3 types of products. They're sold in retail stores in the United States, online, both US, Canada, and EU. And so we have 3 main lines. One is our CBD, like skin body care line, which is under Sweet Earth, sweetearthskincare.com. The other is pet treats. So we have a pet treat line of CBD pet treats. And then we have a CBD pre-roll, which is, and people could say, well, if you're a health company, why would you have, pre-rolls, which is, kind of akin to cigarette, like they look like cigarettes, whereas the rest of your products are all health. And the answer to that is that CBD pre-rolls are very good and very effective in helping people quit smoking. And the bioavailability of inhaling is actually greater than ingesting. Like if you'd mentioned you take CBD oils, well, remember that when you take a CBD oil, it goes into your digestive system, it goes through your liver, through your kidneys. So you're not getting 100% of the efficacy of the CBD. Whereas if you inhale it, it goes directly into your bloodstream. So it's quicker and stronger.
Mm-hmm. Yeah, I do have a canister full of CBD dominant weed that I do smoke some evenings when I really need an extra relaxation. But so then in CBD products, like tell us more about the company structure, like how long has it been around? What's your sort of sales volume like?
So we've been around, so the company, so the core group have been around for 20 years.
Wow.
And they started out in California, Oregon, in the medical marijuana, in the medical marijuana business. And they kind of developed more and more, of a passion towards CBD based on the health side, because we're a bunch of health nuts. And so they kind of went that way. And then I got involved because my background, so, I was an investment banker, but I've done turnaround all over the world. But what I do really well is building platforms. So I was an independent director, and when we talked about the direction of the company, I would say, well, I think we should do this, and set out a plan. And then they just finally said, well, can you lead us as a CEO? So I took over the role of CEO in June of 2020. The core team have been around for 20 years. Our products, we started really developing in 2019. And before we actually sold one product, we spent a year of R&D, which is not, in the CBD, because it's almost like their microbrewery sector. Like there's so many mom and pop stores that, they think that making a CBD cream is like baking a cake. Well, it's not. I mean, baking a cake is something you eat and it's all based on taste, whereas CBD the reason people buy it is they want some medical or some proven type of benefit. And so we kind of started in 2019. We went down that path, and we started launching our products in 2020 in March. And the recent article in Women's World, which featured there was a feature on Sweet Earth in Women's World magazine. And after that, we've seen our sales kind of triple to, up to 5 times. So on good days, we have sales of $8,000 a day, US, and that doesn't include the retail, because we are in retail stores in California and Oregon. But that's typically what our sales volume is. But we're starting to see that increase.
Sure. So then is Sweet Earth a profitable company at this point?
Well, we're cash flow neutral. So, and I say that like we're not a nonprofit, but we're at a point right now where, and this is my philosophy, that if you, I've seen in a lot of sectors, so in my career, which goes back, 20, 25 years, where if you look at a new type of technology, whether it be computers or tech or phones or was I going to say the cloud or things like that? Like if you do not aspire to be a top 5 player in the world, you never will be. So, you have to have instilled that you're going to be a top 5 player. And that doesn't guarantee that you will be, but you have to dream big in order to become big. And so what we do is, the reason I say we're cash flow neutral is that when money comes in, we use that for expansion. So we do, if there's profit left over, that's developing the brand, because ultimately, we're in this not to be a commodity. We're in this to be, a high-end, product company with a strong brand. And that's why when money comes in, we put it back out again in advertising and consumer awareness and R&D. We spend quite a bit of money on research.
Right. Okay. So then, in terms of achieving your top 5 ambition, where are you at?
Yeah. I think we're certainly on the path. What we did, what is also unique is, and I know you've heard this term a lot when people say we're vertically integrated, and I think that vertical integration is kind of an overused term. When you start out in a new sector, if you look at the CBD sector and you say, okay, you got farms, you got R&D for your seeds. You're farming, you're harvesting, you're drying, you're doing product development, product creation, then you're manufacturing, marketing, shipping. Like nobody can have all those specialties or be an expert in that. So what we did very quickly is, for example, like our spa products. If you look at our spa products, and if you go to the website, you can see it's quite well done. It looks very professional. But, rather than trying to create our own products, what we did is, like from the beginning, I should say, from scratch, is we reached out to like the #1 spa in California. And we said, and they've been in business 30 years. And we said, look, here's what we'd like to do. We'll buy exclusively our spa products from you. We'll do a lot of research on the efficacy of and R&D on the efficacy of that, blended CBD with your cream. You can sell our product, we'll be exclusive to yours, and that's a partnership. So we vertically integrated through partnership. So, I would say that right now in the CBD sector, because there are no major players, I like to think we're top 5, but again, it's a very fragmented sector. And I think what we're going to see going forward is, the winners and losers, the ones that shouldn't be there are going to start disappearing, and it's going to be consumer driven, because the consumer wants a product they know that works. And so when you go online, a lot of the products that are available aren't necessarily backed by medical science or data that really shows that they work. So on that side, I would put us top 5, but again, we're not where we want to be. We still got a long ways to go.
Sure. All right, Peter, let's leave it there for now. That's a great introduction to the company. We'll come back to you in due course and follow up. Thanks for your time today.
Thank you. Thanks for having me.
Bye for now. From now on, when I interview public companies, I'm going to go in depth on how they've been structured, where their share price is at relative to where I think it can go, based on the information I gleaned from the interview and based on not an in-depth scrutiny of the financials, but a cursory look at the financials. Your chances of succeeding as a retail investor are always limited by the number of shares outstanding or the number of shares that were issued in private placements at prices lower than the price you paid. For every share issued at a price lower than you paid, there's somebody standing in front of you who can sell it to you at the price you paid, and they can make a profit, whereas you're just getting in. This is the secret sauce of the public company game as it pertains to smaller public companies. Now, barring a breakout event, for example, if Sweet Earth suddenly started achieving profit, and I say profit, not sales, but profit of 10, 20, 30 cents a share, then the number of shares issued at lower prices becomes less relevant. Because yes, those guys are going to be selling their shares into that strength because the company's reporting Q-on-Q profit growth, but it's not as powerful a detriment to incoming retail shareholders because there's so much momentum based on the fact that the company's delivering on its ambitions to become, as he said, a top 5 player. So as you can see, back in 2019, they issued 20 million shares at half a penny. So, that's almost 3 years ago, 2 3/4 years ago. But that's a lot of shares, and they were probably escrowed, and so they're probably still coming out. So a lot of the negative pressure on the share price, and I want to tell you something, I haven't even looked at the share price of this company yet, because I'm doing this new thing where I'm going to break down the capital structure before I even look at the share price. Then we'll look at the share price together for the first time and see where it's at. So for me, there's 20 million shares outstanding. Those are all insiders and founders. 8.6 million shares at 2 cents, 16.5 million shares at 5 cents, 11 million shares at 20 cents. This is where we start to get into the retail realm. But you've got, and if you look at this note, there's a footnote here, number 1. You go down and look at number 1, and you can see that of the 20 million, 2.2 were returned, so there's 17.8 million outstanding of the half penny shares. Now, so if you look at it, so 17.8 million plus 8.6 is 25.4 million, plus 16 million, 25, 35, 41.5. So almost 50% of the shares of this company have been issued at less than a nickel. And then there's another whole bunch at 20 cents. So if this company's trading at above 20 cents and hasn't seen the volume that would suck all that up, then I'd say it's going back to this range here. I don't know. Let's go take a look at that chart. But at this point, I would not expect, if this stock is trading at above 40 cents, I would not be a buyer, though I'd have to have a look. All right, here's the chart on Sweet Earth, and sure enough, it's trading at 10.5 cents, and it's been pretty much a loser since that last financing. They raised money at 40 cents here, and it promptly sold off. We'll see. We'll keep an eye on it.
Yeah, that's not a chart that makes you want to go out and rush out and buy.
No.
I mean, it could follow along. It could just base for a year. You don't know. You don't know.